Hello traders and welcome to the market opening preview. June 17th, hump day on a Wednesday in the year 2015. Traders, great to be with you, coming to you live from Pattaya, Thailand. Cloudy skies and very warm. Traders, this is brought to you through FXCL Excellence in Trading. Traders, please come and visit our site at fxclearing.com for your trading solutions. Traders, we've got some charts and some news and some data and some numbers to go over. But before we do that, let me introduce myself to you. My name is William Gilda. I'm your moderator for the market opening preview series every single trading day before the London Open. Traders, I started trading in the year of 2006 and 2008. I retired from a wonderful 27-year career in the fire rescue department out of the great state of Florida. Traders, I came to Thailand 9 days later for a 3-month holiday to celebrate my 27-year career. Well, traders, it's 2015 and I am still in Asia. Traders, I just want to let you know that I do trade the Forex markets every single day. Doesn't necessarily mean I take a trade every day, but I do listen. I'm looking for opportunities with probabilities on my side to be successful in my trades. Traders, I love trading the Forex markets. I listen to fundamentals. I'm looking at technicals, and I check out the charts all the time. Myself, I trade 8 different currency pairs on a regular basis, and that is what is on my main computer screen all day long. All right, traders, that's enough about me. Let's get over to the legal stuff. This is our legal disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's keep on going. News and commentary. All right, let's take a look at the indices. The US 30 closed up 0.64%. The S&P 500 closed up 0.57%. And the NASDAQ closed up 0.51%. And the Russell 2000 closed up 0.73%. All right, let's take a jaunder over to the Euro side of the world, and let's take a look at the DAX. The DAX closed up 0.54%, where the FTSE 100 closed in the red, just barely at 0.01%. The CAC 40 was in the green at 0.51%. The Euro Stock 50 was in the green at 0.47. Traders, let's come on over to Asia and see what's going on over here. Remember that these countries that I'm going to mention are currently trading as our Asian markets are open. The Nikkei 225 is down 0.43%. The S&P ASX 200 out of Australia is positive 1.00%. The Shanghai is also positive at 0.70%. The Hang Seng is also positive at 0.70%. And the Kospi is barely in the red at negative 0.08%. That's what's going on with our indices. Let's take a look at the calendar. Calendar today, we did have some news earlier in the day. However, that did not affect the markets at all. We had, and that looks like medium impact data. We had some trade balance out of Japan and current account out of New Zealand, but that was not high impact. I will tell you that 90 minutes after the London Open, we are filled with Great British Pound high impact data. Average earnings, climate count, MPC official bank rate, MPC asset purchases, facility votes, and unemployment rate. So it is going to be a wild one in London 90 minutes after the Open. Also, we have really nothing else except for 1 hour before the New York market. So we have wholesale sales out of Canada, which is a high impact news event, and that should affect our markets somewhat, hopefully. So that's what's going on as far as news and data. Commentary is pretty crazy day yesterday. As we look at our charts, we're going to see that the charts sort of like fell back into place where they were supposed to be. And no, there's really no issue there. The problem yesterday was that Greece was like the headlines, and I call them wobbleheads, gets in front of a microphone and decides to say something. They put out these speculations and these rumors that Greece was not going to pay their payment at the end of the month that they bundled, for another 6 months. And, it comes out that all this stuff that they said was absolutely false. And they were just rumors and speculation. And, shame on the media for putting that out there. They should really make sure they know what they're saying before they say something. Because I really think it's unfair to the the people who live in Greece and, you know, their prime minister, that we have these accusations that are just false and really messed up our trading yesterday. Yeah, there were some trades yesterday, but I'm going to tell you, you had to be pretty much on it. I did not take one single trade yesterday. This data came out all through the day, from Asia into the New York, past the New York Open, about Greece and what they were going to do and what they're not going to do. So they have this big meeting, I think, tomorrow. We have FOMC coming out. They started their one-day meeting yesterday and today. So we have FOMC this week, and we're going to have our good friend, Chairwoman Janet Yellen, I call her Auntie Yellen, speaking. So we'll keep an eye on that. That is bound to move the markets. Unfortunately for me, traders, that is 2 a.m. in the morning for me. So there's probably a good chance I will not be at my charts to trade that data. All right, that's it for commentary. I think we got some good trade plans set up for today. Basically, we're going to stay with the trend and what we've been trading, especially on that pound. Wow, was that bullish or what? Across the board, all the pound pairs. Unbelievable. All right, let's take a look at some 60-minute Forex charts. Just remember that every candle on the chart is 1 hour. As usual, we're going to start with the euro dollar. We are in a downtrend, and as you can see from the period separators, that it's popped up just after Asia, and then after that it came back all the way back down during London and continued in a sideways motion. Now, remember, these are hourly charts. So these charts where you see these dojis with these big wicks probably would have stopped you out. And, you know, this was not easy trading here. You basically had to put your stop pretty high to stay safe of not getting whipsawed and get shaken out. So I did not take any at all. However, I am still very bearish in the euro dollar. I do not think there's a change of trend. I do not think we're heading to the upside, even though I'm the minority. The majority says that the euro is going to head back up. However, today's trade plan is we want to get below this 200 exponential moving average, basically the 23.6% Fibonacci level at 1234, but we want to enter like 1221. We want to be below this 200, and then we're going to take it down to 1165. Nice trade. If it works, we just got to break through this 200 exponential moving average, which I don't think is going to be an issue. I think we can get our trade in today. So you say to me, well, William, what happens if this goes back up to the 618? Well, you know what? If you get a bearish candlestick formation, trade it down to the 200 exponential moving average, which then comes support. All right, let's take a look at the pound. The pound moved its little ways every day, just moves a little bit at a time and just keeps working its way up. And, you know, for the past week, the pound has just been trading beautifully. You know, the pound is not good for pullbacks, but I'd really like to see a pullback here as close to the 618 as we can get. If it just pops this resistance at the 100% on this fib, we'll just take this up to 57.42, and we should be fine with that. There's plenty of pips there, and we'll be safe. But yes, we are bullish on the pound pairs, absolutely. Aussie dollar, really, really tough pair to work with, because remember, this is a commodity pair. So, you know, if you look at yesterday's chart, I mean, this, you know, in the period separators, you can see it came all the way down, then came all the way back up again, then came down again, and you know, this is reacting to all these comments that were made yesterday. And if you were lucky enough to be in this down move to the 200, you did fine. I don't know if I'd want to be in the up move into New York, but you know, you could have traded this off of both. You know, this was good sell trade-off for resistance and a good buy trade-off of support from the 200. So you did have some trades yesterday. The entries were just very difficult. And this is going to react every time somebody makes a statement. And we just have to watch out for that. I just want to sell this after a break of the 200 at 77.15. We'll take profit at 76.90. I know there's not a lot of pips in this trade, but if you look left of the chart, you know, it's just an ugly chart. There's a lot of support and resistance areas. This is not an easy trade plan. This is not an easy trade. I'm not really looking to be too aggressive on taking an Aussie dollar trade. I think I might wait 24 hours to see what happens after FOMC. All right, let's take a look at the Euro Aussie. Euro Aussie, in my opinion, remains bearish. You know, this. I know you're saying this looks like the same chart as yesterday. Well, it basically is, except I moved the fib to give us a proper fib, but we're in the same position as yesterday when we started our day. and we're at just above the 200 exponential moving average. We want to take this down. Want to sell this down to 44.32. We're just waiting for a bearish candlestick formation below the 200 exponential moving average, and then we'll see what happens from there. No changes from yesterday's trade plan. We're just doing the same thing, and hopefully we'll get it traded. Here's our euro yen. I'm still bearish on the euro yen. We're in this little congestion area here because we're in Asia and there's no data out. This is just waiting for this to break below the trend line, which I don't like using a current candle when I put a trend line, but there was really not a lot I can do here. But we're in this squeeze play here, and I'm just waiting for this to, well, you can actually call it a wedge, and I'm waiting for this to break to the downside at 138.59. And we can take this down all the way to 138.02, and that would be absolutely great. And we'll just continue to take this to the downside. Yesterday, again, in Asia, took it to the upside, and then London took it down, and New York took it sideways. So, you know, it is what it is, but it was not easy trading yesterday. Let's take a pair that's had absolutely no price action in the last several days, almost a week now, and that's the New Zealand dollar. And this has not done anything. So now I'm making my criteria much harder to enter a trade here. So this needs to pull back to the 50% fib before I'm going to take this. This needs to either jump up or pop down or do something. But I'm not taking any little like 38.2 fib or anything like that. This needs to really prove to me that this wants to go short. I want to short this. I do not want to buy the New Zealand dollar, right? But I need a pullback. I'm not going to trade it from here, and I need a pullback. So that's why the chart looks like the one from yesterday, because pretty much it is. I just changed the numbers around. But we just want this to give us our pullback to the 618 at 70.23, and we'll sell it. And traders, that wraps up our 6 currency pairs. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, please come and visit us at fxclearing.com for your trading solutions. Traders, have a great trading day, and always remember to trade smart and not hard. Traders, till next time, have a great trading day, and we'll see you. Bye-bye.